Also, due to travel, due to some other things, there are people that are new to the panel and people that were not able to make it. But I will have them all introduce themselves in a second. What I do want to say is, yesterday during one of our talks, I was talking about how, as an LP in a VC, our GPs say that sometimes the best deals come from basically relationships saying, hey, you should invest in this, and then we do. And so for those of you new to the family office community, this is something that's very unique. Anthony, by curating this type of event, actually allows people to have not just be invited to the room, because earlier Katie's group session on women and women empowerment, that's something that doesn't happen often in Silicon Valley, right? Only 2% of female founders, only 2% of venture capital goes to female founders, if you didn't know that. So I think that we think in the broader context of what Global Family Office Investment Summit is, what Anthony and team have curated, it is actually a very unique experience. So Cal and I go to a lot of these types of events, and we enjoy all of the different formats, but this is something very special and unique, so I just want you all to sit with that for a second. So, yep, thanks Anthony. So this panel is going to be a lively, dynamic, interactive session. We're going to talk about a number of things that have to do with co-investment, which is how do we know about deals, how do we get access to deals, and then we might do something different this morning. If there is a little bit of time at the end, we will go ahead and take a couple questions. So thanks again, thanks for being here, and we'll be starting with introductions, and we're going to start with Ceatrice. So Ceatrice, and going down the line, introductions, and we'll get right into it.
Started first today. I'm Ceatrice Foster. I am the founder and Chief Investment Officer of my newest fund, Avelia Capital Partners, where we acquire distressed hospitality and office space. I also am the founder and owner of Trinity Capital Development, which we fund development projects globally in excess of $1 billion, no less than $100 million. Is our ideal investment. And I also own a brokerage with about 40 acquisition managers where we look to sell, divest, and acquire other distressed assets and small balance real estate globally.
Thank you. Steve and me, we've got a global holding company called Big Bamboo, and the goal is to start companies and try and be the first one in the world to do something, which I know sounds odd, but we've had some success. Some have done well, some haven't, some we're not sure. But it keeps us at the forefront of trying to do really cool and unique things.
Hi everyone, my name is Eni. I'm the CEO and founder of T-Blocks. We are an internet capital markets infrastructure. We're regulated out of Luxembourg. We originate, structure, and distribute real asset private opportunities from emerging economies. So basically, we're an infrastructure layer between those assets that cannot be accessed and the international professional investors across the globe.
Hello, I'm Pedro. I come from Portugal. I've been attending the event since the 7th edition, so thank you, Anthony, for curating such an amazing environment, trustworthy environment for families to get together. Got to learn a lot in this summit. But what we do in Portugal is, as we probably all know, is co-investment. And so we put families together. We've been around investment for so long, started in 2002. But we put families together so that we have more strength, and we don't need to use that much of our own equity, because I think that expertise will come from all over the place when we have more than one business owner. You just have a spread of risk, and you also have more inputs, you have more feedback out there. So this is what we focus on: hospitality, service departments, and we believe that it's good to live a quality life, a healthy life. That's why we focus on longevity residencies.
Thanks, Pedro. Thanks everyone for the introductions. So going back to Ceatrice, just to get into the mindset, everybody, what makes an interesting co-investment for you?
The location, the story behind it, of course, the returns.
For For this panel, ours is actually the other side. It sounds odd. Our biggest company is called Greenway Funding, and the funding is a misnomer. We actually do sustainable bonds. So it's construction loans. The banks like everything 300 million and up, which I know sounds odd. When you're in the sustainability space, people will come to me and they're like, "Hey, we've got this great project, and we love this and that." And I said, "Look, the bankers don't care about your project." I know it sounds odd. I said, imagine going to the bank and saying, "I have this house and I want to build an infinity pool. Let me tell you about the view. You won't believe what this pool," and the banker's like, "I don't care. Do you have 30% collateral? Are you going to use sustainable concrete, and can you pay the debt?" That's what a banker cares about, and that's what we deal with. So our co-investments is actually partnering with sovereign companies, sovereign wealth, big corporations when they're trying to do a $1 billion project. If we can take off 60, 70, 80% in a sustainable bond or construction debt loan, it just lowers their equity service, increases the debt service, but they own 100% of the project. So we get pulled in to try and help lower the capital requirements on big infrastructure.
When we actually started T-Blocks back in the day, we started as a tech infrastructure, basically offering the tech services to these asset and fund managers in emerging economies. Then we realized the potential is much, much greater, considering the uncorrelated returns that this kind of assets actually offer in comparison with the US or Europe. So for us, structure is very important. The history behind the asset and fund manager, the track record, is super important. Previously engaged relationships with private capital, international capital is a must. But of course, we also understand that new asset managers, they don't have access to this kind of rails. So this is what we're working on right now.
Thanks, Annie.
Well, a best co-investment for us is actually when we have the best players aligning capital to serve a purpose. Location definitely has been said as one of the very important things. We all know that, location, location, location. Regardless of that, if you have influence, if you have power, and if you have the financial capacity, you definitely can make things work in locations that have not yet been explored. So we do like to use a lot of leverage in our projects because we think that that's what they're there for, regardless of it. We like a co-investment when we have partners that have the same vision and their long-term vision.
Thank you. Annie, I think this is a good question to start with you first on with T-Blocks especially. So this is a panel about co-investment, and I opened up with access. And when we think about access, we think about people that already have wealth or people that have access to wealth. What are you doing specifically, and then we'll move around, with T-Blocks and granting access?
So we're thinking about long term. We're thinking about democratization. We're not retail. Again, we're professional accredited investors. But when it comes to strong assets in emerging economies, and of course, I'm personally from Albania, so we started in Albania. The success story is engaging a group of a bunch of diaspora investors, getting them all together into one vehicle as a co-investment opportunity, and then we realized the potential of this, so we scaled into other countries. Gulf, we're now in the Gulf region in Saudi Arabia. I'm going to give you one example in one of our biggest clients in Saudi Arabia, Tourism and Heritage Fund, $1 billion fund between Mecca and Medina. And I know, despite whatever is happening, hopefully everything goes back, but this is all about creating access to opportunities, uncorrelated opportunities, who also generate over 25% IRR for those investors. And for some investors, this is a primary investment. For some others, it's a diversification. But this kind of investor world, they would never have access unless it was for an infrastructure that involves technology, involves, let's say, innovative digital finance into that.
Go ahead, Stephen.
Can I go? Because I'm going to switch gears, and this will, I think, play off of that. We're in the process of launching what will be a global digital equities exchange. And so you talk about closing liquidity. I'm just going to give everybody some quick math and numbers. I think it's real easy. There's 1 million cryptocurrencies in the world, plus or minus. Total market valuation's about $1.3 trillion. If you take out Bitcoin, so you have 1 million cryptocurrencies and $1 trillion value. And we've done a lot in crypto. We like it. People are like, Steve, why don't you do Bitcoin anymore? I'm like, it's insignificant. It's irrelevant. They're like, well, what do you mean? There's 45,000, just 45,000 public equity companies in the world that are worth $109 trillion. That's not the big number. There's 5.1 million companies in the world that are 10 million and up, middle market, structurally relevant to go to capital markets and raise money, but the friction of going public is too big. And so the opportunity to create a new digital equities infrastructure to allow middle market companies to go public quicker, faster, cheaper, with less friction, and allow institutions and retail to access those opportunities is a $14 quadrillion market, and the technology is finally there to allow you to close those gaps. So the co-investment between retail and institution and family office and PEs is about to be closed, and the same opportunity will be available to everyone.
Thanks, Stephen. And the next panel after this is going to be on Web3, so it's probably we're going to go maybe do a deeper dive. I've been an early advisor to a number of tokenization of assets, which I want to be really clear because Stephen talked about 1 million cryptocurrencies. We know that probably, like in all life, well, in this case, not 99%, 99.9% are not worth your time or effort. So always do your due diligence, have some risk. But I do think for what Stephen's talking about, when any is working on, that I know of, is a tokenization exchange from out of Luxembourg for the ecosystem. So I want to be clear that this is access, but do your due diligence. And Beatrice?
Well, we're focusing primarily on, as I stated, distressed assets. But what's happening, and I don't see enough people talking about it, is the multi-trillion dollar in debt, amount of debt that's coming due in America with our notes, our commercial notes. They're coming due this year alone. They're maturing. So what we've done is strategically placed ourselves in investing in assets like that, to where the asset itself is not distressed. The cash flow is good. It's the debt that's distressed. So by positioning ourselves that way, we get another form, another way to acquire and position ourselves in a way to exit in a couple of years when the market responds. So not too many people are looking at this in this capacity, in this structure. They think distressed debt, the whole project, distressed assets, the whole project is distressed. It is not. I was able to identify that through our lending side back in 2021, and we saw a trend happening where it was owners were stressed, developers were stressed, and these were loans that were taken around 2019 that started maturing in 2022, 2023, and the banks are very stressed at this point. So we've been able to position ourselves in a way through relationships and things to take a lot of this debt off of the lender and negotiate with the actual founders and owners and exit them in what we call a friendly foreclosure, and that positions us to own that asset for about 20 cents on the dollar without stressing the market, raising, capital for our investors and raising their returns as well, and ideal assets like trophy properties, like office buildings, but now we've changed our focus on hotels because we see that that's going to help as well.
So it's very interesting, Pedro, before I get to you, but this might be relevant as well to you and the others. How many people are aware of the fear in the private debt market right now? Right, Blue Owl. So I'm going to switch it up a little bit before I get back to Pedro, just so people can hear. What are your thoughts about the crisis of the private debt market?
I think you should, I would jump that part. Let's just finish. I will use my time later.
Because you were talking about distressed assets, the seizing up of the private debt market right now.
Yeah, so that's the private debt market. If you remember a few years ago, everyone was got to have private credit. We were pouring capital into that. They were really excited. And what we had was a lot of bridge loans because our regional banks were just not able to fund it. The whole fiasco with Silicon Valley Bank and things like that happened. So we had a lot of developers that typically would go to their local banks. They couldn't. So the private debt space ended up, it became our go-to. But they only planned and were structured to have those deals about 36 months. And what happened is, obviously, they matured. We had no idea that interest rates were going to basically quadruple. They thought they'd be able to exit, and it just didn't happen. And so what do you do at that point? You can't negotiate on the debt side. There were a lot of developers that wanted to do a deed in lieu of foreclosure and just give it back to the bank. There were large, platforms that were just giving the keys back to these, great office buildings, trophy office buildings, and everything. And sorry. And they just couldn't do it. And so where we were able to step in, and I'll give you an example because that's sometimes easier. We had an asset in downtown Chicago that originally sold for about $120 million. We acquired that for $18.5 million. And so now we just got an offer on that asset for just immediately, probably a week after we closed, 3 times what we acquired it for. We got another asset that had traded before, and these are smaller numbers, for about $25 million. We got that for $2.5 million. Our latest asset originally traded for about $160 million. We're gonna acquire that for about $60 million. And those returns are in excess of 16%. So we are right now bailing out those credit facilities.
Thanks, Beatrice. And so I work for a middle market investment bank, US Capital, and in times of volatility is when middle market banks do extremely well because big banks, big institutions, and everyone here is solving for it a different way, but that's where this conversation on access becomes really important because if you're just following what the big players are doing, that is like a herd. And I mean, if you imagine that you have private credit or you are one of the creditors and you're told that you're not allowed to take your money, which is what's happening right now. So thanks, Beatrice. I think that was important to share that. So back to you, Pedro. Pedro, what are some of the best co-investment opportunities you're seeing right now?
Well, basically, we're talking about completely different markets, okay? Portugal, we have talking about 11 million inhabitants. Very small market, but one of the properties that our family bought is more than 1,000 years. So it's different.
Only 1,000
Yes.
years.
It's different kinds of properties. We are talking about, in our company, what is our strength is the contacts. In a very small market, we know everyone. So this means that we like ground ups or completely refurbishments so that we know exactly what is there. We like to put the families together. I also have, as Annie was saying, I have this vision of democratic investments. I think that every family should have the opportunity to invest, not only the ones in this room, but also the ones that we are providing for. So this means, and Annie is one of our strategic partners, so I really enjoy his solutions and I trust Annie and this project. So this is to say that in Portugal, being a very traditional market, we invest for the next 100 years. We invest in solutions that have 70% leverage on the property and can be re-leveraged every 2 years. And we're talking about interest rates that are below 4%. So in a personal situation is below 3%. So this is a completely different market, it's a completely different approach, and we don't have that large projects that you do have here. We do have some of our hotels with 120 bedrooms, but definitely 300 units, 500 units. This is the kind of size that we are allowed to build because in Portugal there's a lot of protection for nature. And us, what we shop is for long time. So we shop properties that have their own water, drinkable water and water to use in the fields.
Thanks. So I want to actually stay on this topic on partner risk. So yesterday I talked about how all business is risk management, right? So each side is trying to manage their risk level. We have likelihood and impact in terms of what risk actually is. And I know yesterday we had a presentation that said there's zero risk investment, which we know it's a little bit of embellishment. But in terms of how you look for partners and how you gain partners and give access to partners, what are some of your thoughts on how you personally do that? And I'm going to start with Stephen.
Well, if I stay on the line on the digital side, and you guys are correct, and Vineet and a bunch of these guys, cryptocurrency is cool, but it's it's a penny stock. It's something you buy at 10 cents to go to $1. If you look at traditional architecture, a company that does a direct listing that has a massive community or following or customers, you're diversifying your risk. The biggest reason companies fail, other than timing, is actually access to capital. And if you can remove the friction and give access to capital, but if that capital is connected to their customers or their community or people who believe in them, then that access to capital is going to come with a lot more support. It may come with other shareholders. It may come with buying your product. It may come with promotion. And so the more you can use these tools to create that community of support, the traditional capital markets don't do that. At the institutional level, it's JP Morgan and Goldman selling to a bunch of guys who get in early and try and make money. That's not a community loyalty aspect. And so that risk diversification, the more you can spread your ownership or your equity or your involvement and opportunity to people who like and know and trust you. That's what they always say when you're raising money. Go to people who like and trust you. Well, your company should be the same thing. So we look at that diversification down to how do you give direct access to people who want to support you and make it easy and frictionless for them to get involved. And the bigger that community is, institutional liquidity exists at 25,000 or more. And so the goal is, can you find companies that have enough of a community to buy and support you, and your risk is really spread out.
Thanks, Stephen. So CHS, we're talking about partner risk. How do you manage your partner risk?
I'm sorry.
How do you manage your partner risk?
My partners? Yeah, my partner risk.
And
I just
a little bit closer.
I'm sorry. I basically, when they're presenting, I want to know basics. You have to know exactly what you're asking. I want to know to ask. What I find is people have these great ideas, and I mean, I'm sold. They pull me in, and I'm like, yes, how much money you need? I'm going to have to, well, I think I want this. Oh, okay. Well, how long does it ask? Well, we're projecting maybe 3 years. We're not sure about 5. Okay, well, what are my returns? Well, ideally, if we do this, and that's the most frustrating thing, if you're not clear on what you want, then I feel that you're going to carry that energy into the project, and we're going to have problems, especially when there's unforeseens. I can't trust you to know what to do or how to pivot. You couldn't even pivot the conversation. Just throw a number out there, even if you don't know how much you need. If someone asks me how much I need today, I'm going to tell them I need about $2.5 billion. I'm going to know where to place it, and if I don't know where to place it, I'm going to figure it out. But don't come to me and you just don't know, so a lot of them look for me to guide the conversation and whatever you want to do, and they're not confident in the ask. So when they're not confident in the ask, I'm not confident in the deal.
Thanks. Pedro. We'll go to any after.
Okay. In our case, again, I came from a very traditional market. So the way of selection of partners is actually by the relations that we have. Like our lawyers, 20 years, our tax advisor, 15. The construction companies that we work with, more than 30 years. So because it has been in the family. The thing is, and when we look at strategic partners and like in the Global Family Office Investment Summit, I've been discussing this with Annie for many summits because we like to understand what people do, we like to dig into, and we like to see if it's for real, because in the end of the day, my company in Portugal is my name, is Pedro Guerra Alves, so I'm not going to change my name. It means that I need to deliver. I have the trust of investors that trust us to co-invest, so it's honoring that, and for us is the due diligence and this networking that we can trust and invest together.
And Pedro, stay here for a second, because we talk about, I come from Silicon Valley, we understand that the perception of, I wouldn't call it easy money, but that's a perception, VC world, and that failure is built in. We actually talk about failure is not bad. But of course, if you're the investor, that's really bad. So sticking with that, because I think when the ecosystem of startups, so not real estate, but I think it's important in terms of relation building. How do you manage that when you're talking to a family office? Think about outside of yourself. How would you actually manage that discussion where you don't have as much reputational history, but you still believe in the asset? How would, just thinking about philosophically?
Well, I'm not a great philosopher, but still, if we have an asset, I think Brian told that yesterday. Sometimes for assets, you have to step in and you immediately feel that you belong there. Obviously, you will find a way, and people will see it in your eyes, and they will trust you. The same thing with newcomers or new relations. Sometimes you just spot all around the other side of the room and you say, I want to talk to that people. And I encourage any one of you to do that to any other, because it's, in the end of the day, we feel it, and our instinct is very powerful. God is moving all around us, so God bless us all.
Thanks, Pedro. Okay, Eddie.
So I need to go back a little bit to that, because we did get a little bit into the crypto world, which of course I'm a Bitcoin guy, so I'm a Bitcoin first guy. Most of the cryptos out there, they are crap. What we are doing with T-Blocks, and I think what Steven is doing as well, we're not talking about crypto. This is a infrastructure. This is securities. So when we say Luxembourg, this is the #1 cross-border jurisdiction in the world. This is all about governance. Our structure, personally, on behalf of T-Blocks, we work with big names like Deloitte, Baker Tilly, Swissquote, regulated broker-dealer placement agents, and also digital trading venues to be able to get closer to the gap between a great asset and the access to capital. We don't believe into that there is a problem with getting access to capital in the world, but the challenge is structural. The challenge is the infrastructure, the rails, and how you are structured. That's true what Cephros was saying. A lot of asset managers that come to me as well, from emerging economies especially, she's talking about US mainly, they don't know the financials behind it, but imagine what happens in the emerging economies. This is another solution we're working on, which is going to be AI originator. We spoke a little bit about it. This is not only about legal due diligence, this is also about financial due diligence. This is also about educating this asset manager that, hey, if you're going to go out in the world and get access and try to get access to try to get listed in a digital way. Again, this is not crypto. This is fully securities wrapped around in innovative solutions out of compliant jurisdictions. You need to be structured. You need to be what you're asking for. You need to have option A, B, C. You need to have a strong governance partners behind it who do the audit, who do the accounting, who do the management of the thing. And we believe that there's a big pie in the world that is still. I was earlier this year in an event. The CEO of Coinbase, one of his quotes that actually stood in my mind was, "We are going from the unbanked to the unbrokered, because they don't have access." A lot of people, not only assets, but there's a lot of investors who would love to have access to a 25% IRR deal, and this is what we're bringing to the table.
Yeah, so speaking as an investment banker, you would think that I'd be very concerned. I think
Yes.
but I'm not. But the thing is, investment banks often get criticized from companies like, why do you charge fees and why are they so expensive? And I think, especially in emerging markets, because you think about the costs involved with that. Hang on, Stephen. So what I would say that is, what is the investment bank's #1 priority, other than raising capital, is the due diligence, right? Because you have to make sure that you're managing risk, counterparty risk. You have to make sure that all these things get done, which there's a hard cost to. Yeah. So what you're doing in tokenization, exchanges, especially in emerging markets, that might be a very viable solution. I do want to, before we get to you, Stephen, is that we've been talking about cryptocurrency generically. That is dangerous because in terms of what Eni's talking about is the infrastructure layer that is the same technology that runs cryptocurrency, but is not cryptocurrency itself. It's actually the tokenization part of it. And so in some cases, one of my investments, which I'm not shilling, one of the first companies to actually tokenize the entire, instead of security, tokenize the actual fractional shares of the company, but one of the first. And so I just want to make sure everyone's aware of that. Go ahead, Stephen.
Actually, I'm going to retract my "you should be worried," Keith, because the investment bankers actually play a tremendous role because it is advisory, it is institutional, it is structured. We're on the digital side, and everybody's right. This is just the evolution of technology into structured investments. So we call it digital advisor service. So the investment bankers, in my opinion, play a tremendous role because it's important that the companies understand how to get through compliance and how to have the best teams and how to get through legal and audit. So by the time they are listed, whatever that listing platform is, it is a structurally compliant one that they also understand the risk of listing and building liquidity and having post-issuance support. So the investment bankers and the roles Keith play, I think, are infinitely more important. The people who should be worried are the family office investors and the VCs. Because as an entrepreneur, if I've got a company that's 10, 20, 30 million and I have the opportunity to raise capital and I go to a VC who's going to want triple liquidation preferences and 3 seats on my board, or I can sell direct to my customers, I'm going direct. I'm doing a direct listing. So the VCs and the PE companies are the ones that are taking companies private and pulling that equity, but the capital at the entrepreneur level is going to change. So the role that Keith and the investment bankers play, I think, will be infinitely more important to help companies get structured and go direct.
Thanks, Stephen. And have we met before? No, not really. Really. But, so thank you. And the key there was that on the theme of due diligence, which I think a lot of people, especially startups, early stage startups, are not aware of, that there is a whole process to qualify whether you are even investable, right?
If I make you, because the investment bankers are as much of a misnomer as our company, Greenway Funding. When I started, I'm like, we don't do funding, we're debt. We're a loan company. Investment bankers aren't technically investors. They're advisors who do a tremendous job helping companies get investments. So I jumped the gun, but yeah, the advisory service is a tremendous part of the toolkit that companies need to be successful.
Thank you. Citrus. We were talking about due diligence and how do people get comfortable. And I mean, you work with distressed assets. So, I mean, that's a very high level of due diligence.
I mean, like I said, I was speaking on earlier, I need the whole story. Everything that you know that I could possibly want to know about you, give it to me. I want your experience. I want to know the asset itself. I want to know that you've done your due diligence. I want to know what your possible valuations are. It would behoove you if if you have a larger asset that you're looking for funding for and you want me to invest in or finance through our platform, you'd be wise to get your own feasibility study, put some upfront capital into your deal. Don't wait for me to do it, because I'm looking for the risk, and I am going to position myself a lot better.
I apologize, Keith. This is what I'm talking about, the gap, where a company needs to have an investment banker or somebody that knows how to structure an offering so that when they talk to somebody with money, they're ready. Often the companies aren't ready and they don't know how to get ready, and there's a role for them to play to get them there so they don't make mistakes when they have somebody that has capital and is interested.
Thanks. And with the time we have left, just lightning round. We're going to go start back to Citrus and go this way. One piece of wisdom you want to impart on how to think about co-investment.
Don't be afraid. Right now is the time. If you see a good deal, do not wait, because there's so much capital out there. We've been holding it for so long, and we are excited about the next opportunity to invest in, because we need to put money to work. So do not be afraid to present your deal. If you know you have something good, call. Old school, calling, door knocking, kick the door in.
Mine's the inverse for the entrepreneur. Everything you need to know about raising money is 3 words. That's all. Capital follows customers. First thing an investor, who's your customer? Focus on customer acquisition and the capital will follow more easily.
With the technologies and innovation today, especially tokenization, there's a real opportunity of great assets to be publicly listed online without an IPO at a fraction of the cost what it actually costs an IPO. So I would urge all the asset managers, fund managers, if you have a great asset, you should do that. The investors in the other side, with whatever the crap is happening in the world right now, there are many uncorrelated opportunities in the other part of the world which are worth looking at.
Since the time is run, I will be very, very fast. I'm just saying that we're talking about co-investment, but I'm sure that most of you in the room, and this is an educated room, have most of that capital sitting down, either in a deposits account, gold, or even all your real estate is paid off remember, there's professionals to make it easier for you. You can make it as everybody has said, as everybody has done, your grandfather, whatever, or you can make it different. I honor the legacy that I inherited from my grandfather. As you can see, I wear it in my chest, I wear it in my hand, but I'm changing. And he said, when I'm gone, then you do it your way. I'm doing it my way, and I hope that you do too. Be proud.
Well, I want to thank all the panelists. I thought it was a very interesting conversation. I think it was very lively. I learned a lot as well. And I'm going to turn it back over to Cal, so thank you very much.